Scotty North. This is Xenium.Live, where we talk all things money, finance, and property. And it is a Thursday lunchtime. Let's have a look at the time here. Thursday lunchtime, and a big shout out and welcome to all the people watching live on our show. We really appreciate you joining us. And also everyone who watches afterwards and on our Xenium.Live podcast, which is available on Apple and Spotify and all those places. Well, today I'm joined by a guest, and I'm told this man still has the first dollar that he's ever earned. And when his car gets low on horsepower, he simply feeds it more hay. Someone who knows that Budget is not just a rental car company. I'm, of course, referring to PJ Patterson. PJ, how you going, mate?
I'm good, Scott. Those are some great one-liners. I don't think I've ever been introduced that way. I can tell you for sure that I do not have the first dollar I ever made. Still, that was spent on video games, I'm sure, back in the good old 80s. But thanks for that intro. It's a lovely day here in Sydney. I'm standing outside the finance ministry to do our live broadcast and talk about the budget, which came down last night. A reasonably good budget, so we'll get stuck into it, I'm sure.
It is, and look, you're right. We've titled today's show "Federal Budget Decoded," and of course, the decoding part is because we all know those guys get up there and waffle on about all sorts of stuff for a long period of time. Now, I know that you spent a fair bit of time prior to this show looking into everything that related to your clients, and you're going to share it with us. So, mate, where do we kick off? What are we going to do? Winners and losers, or you got some top tips, or what's going on?
Well, I'll hit a few of the main points. And yes, I mean, the think tank was up all night last night decoding the budget. So, we've pulled out all the best bits of the budget. I suppose the first thing, two quick things to really start to kick this off. The number one thing right now is that, of course, the budget hasn't yet been legislated. There are still a number of things that have to pass through the House and the Senate, or the Senate in this case, to approve the budget. And so I think there's already been indications that the Labor Party is going to get on board with the budget and pass it. I haven't really checked the news yet much this morning, but it does look like that they're going to do that. Obviously, you're going to get the usual whinging from various portions of the opposition and parties outside of government about various things. But look, we're in tough times. The government had to have what I would have described a bazooka type response. I think in large part they've delivered that. And that, of course, is evident by the fact that Australia is going to touch we're going to use the T word here, the $1 trillion worth of debt very, very soon by the time this is all said and done. So who would have thunk it? We went from the Howard years where we didn't have any debt or paid it all off to 10, 12 years later, having $1 trillion of national debt.
Well, it sounds like a large number, mate, but I mean, really, it's just what you spend on.
Well, that's I was going to make a crude comment there, but that's my wine budget, for the weekend. It's definitely $1 trillion. If I was in Zimbabwe, it would be, but luckily I live in Australia where our dollar actually still buys something. But nevertheless, I think it was a pretty good budget. There's always going to be winners and losers, but I think what they did obviously try to do is, first and foremost, and we can get stuck into a couple of the things now regarding the budget. The first thing, I guess, to really highlight is the fact that they are they're cutting taxes. So they are lowering the tax rates, or basically what they're doing is raising the thresholds under which you're going to pay certain levels of tax, and they're really targeting the lower end of the income spectrum. So the other thing I wanted to mention a moment ago was, if you're really interested in this budget stuff, the government has a web page, funnily enough, budget.gov.au, that has all things budget 2021 on it. So it hits all of the stuff. Most of the things we're going to talk about today, obviously, are all of the things we're going to talk about today, and many other things too regarding the budget. So if you're finding yourself maybe unable to sleep or have a bit of insomnia, then please, there it is right there. Then jump on that page, and guaranteed probably to put you straight to sleep. So the first thing, of course, as I mentioned, is the lowering of taxes. So the lower income earners of the country, so people that are up to, earning up to sort of, $80,000, they're going to get some tax benefits. And I think it equates to effectively a pay rise of about $30 to $40 a week in certain tax brackets. And this will be retrospective as well, back to July of 2020. So some good news there is that if you had been paying tax, which of course you would have been if you're PAYG, at your higher rate, which has now become a lower rate, first of all, you're going to get a better refund or a nicer refund at the end of the year. And I think there was some talk maybe that they would try to figure out how to adjust that on the fly. So I don't know if they'll be able to do that or not, but it does mean that you'll probably get a juicier refund at the end of this year. So that was good that they're bringing tax cuts that had been slated for another year or two down the track. They have brought those forward. So that's certainly going to put more money in people's pockets, and perfect timing as well, because we are only 2 months or so, a little bit more than 2.5 months outside of Christmas. So I think the goal there is they want to really get the people of Australia reemployed, which we'll talk about in a second, and back to work, and then obviously spending money during the Christmas period. So tax cuts, that's a big bonus.
Right? I mean,
it's a great thing.
Tax cuts obviously impacts a lot of people, and spending that money. I guess my question now is, they perceive that if they give a tax cut, people are going to spend the money. From what we've just come out of, there's all the stories of the old, my grandparents and that living through the Great Depression, and that, as the joke I alluded to at the top of the show, still having your first dollar and this sort of thing. Do you think that we're going to see the spending in the economy that they're wanting from these sorts of things, or are people just going to go, right, that's more money for me to save? Like, where do you think it's going to go?
That is an excellent question, and I don't really have an answer for that. I think it could be a mixed bag. I think certainly, given that we've had the GFC, and many of the working population would have gone through that. We've had other small corrections and crashes, and then now this major one due to COVID. I think there's enough memory out there that people might be thinking to themselves, well, if I'm given some tax cuts and I have to pay less tax, which means I have more pay, maybe instead of going and spending it on a new, flat screen TV or some other useless piece of, technological garbage that you're just going to use, once in a while, sitting around your house, maybe they'll put it towards their mortgage. Maybe they'll save it. Who knows? There's also, and I'm sure we'll touch on this as well, but they're obviously trying to stimulate the housing market insofar as continuing to promote the first home buyer scheme and some of these other things. So I think the government is trying to target it at the very least, supporting the property industry and making sure that we still have a robust industry around, or a robust market around people buying and retaining their properties. But I don't know. That remains to be seen. We're going to have to check in with that data probably in November. See what the November data tells us around consumer spending, and probably it won't be until December and even then January when we get those numbers for the Christmas period to see whether it really had that much of an impact.
Yeah, it will be interesting. So, I mean, that's tax cuts is one thing. So there's a lot more to it than that, right? I mean, there's also,
of course.
What's our next point?
Well, the next point is they really hit small business hard. So not hit them as in damage them, but they really went out of their way to support small business. So couple of the key measures that I actually really like this for a number of reasons. I think it has some other consequences that we'll touch on, but they're trying to get new apprentices going. They're trying to get people that are basically under the age of 35 back in the job market. So they're supporting apprenticeship positions. They are supporting small businesses that are hiring people under the age of 35 with some weekly support mechanisms. There's a $200 a week payment and another $100 or subsidy, I should say, for businesses that put folks on that are under the age of 30 even. And they are renewing some of the things like the instant asset write-off, which is a big one. So if you buy a piece of equipment in your business this year, you can instantly write off the whole thing. I think there's some top-end thresholds on that, but basically, if it's anything under, I think about $100,000, you can write it off immediately. Actually, no, sorry, they took it up to $150,000.
Moved it to 150 in COVID, but I didn't know if it stayed there or
It has stayed there. Yeah, no, I just found that in the budget fact sheet off budget.gov.au. 150,000. That was the ceiling that they had, and that's now been extended until 30 June 2021. I wouldn't be surprised if they extend it again if we're not seeing the support out there in the small business market. What was the other thing? They are removing some of the FBT exemptions as well. So a lot of businesses support employees by giving them phones or computers and things of that nature. So there's some FBT exemptions, or they're not going to be charging. This is fringe benefits tax. For those of you that don't know what FBT is, that's actually starting in 1 April of 2021. So it's a bit of a delay, but it's still a good benefit. And one of the key things they're doing, and this might very well help businesses that have been struggling through this time period, is they're doing something called a carryback loss write-off provision. So effectively, my understanding of this is if you've had business losses this year or profits in previous years, there's going to be a mechanism whereby you can take your losses that you have this year and offset against profits from previous years and actually claim back a tax refund. So this is a pretty big deal for small businesses that might have had some profits in previous years, but now have losses. So obviously you'll want to check with your accountant and your tax professional or read the budget papers just to get a full understanding of that. But and I know our audience are very wealthy people, and this provision is for companies with a turnover less than 5 billion. So I'm sure you have one or two listeners that their companies are probably turning over less than 5 billion. But anyway, that's
small amount. It's a small amount of our audience, mate. We normally they're definitely into the topper end down there, for sure. But, that's good. I'm glad we can appeal to the great majority.
Oh yeah, no, it's good. So again, I think they are really trying to, again, support small business in particular and keep that part of the economy going, because 90% of Australia's economy is based on small businesses, and they have been suffering. We've had a bad year, as we all know, with the bushfires and then COVID and now just the ongoing economic turmoil around that. So again, I think they're really looking to make sure that small businesses can and do survive through this. There's some other things like R&D, some grants for research and development. They're really trying to support the manufacturing industry as well. So if you have a manufacturing business, that'll be a business that has got some support from the government. And I think basically what they're offering there are some grants and other monies for, as I said, for R&D. One of the other interesting things that came about, and I'm just looking to see if I can find this specifically, there were some other rules around people who have granny flats or are so I guess there was a recognition of the fact that many older Australians now are living still at home, or they're looking to not living at home, but having their entire family live together. So the kids might be looking after the parents have moved in, they might be building a granny flat, and there's some transfer of assets and things like that. They're looking to actually support that segment of the population by offering some exemptions for establishment, variation, termination of these sorts of arrangements and agreements. So that's certainly, I haven't had a lot of time to delve deeply into that, but I thought that was quite interesting as well. And it also seems that they are trying to support the mental health side of things. Again, I don't have particulars on the mental health.
There was quite a bit more money for NDIS and other bits and pieces I saw that interested me, which was good to see. Good to see them spending. Now, I guess that we've got that sort of personal, we've got the business, but in reality, a lot of this money out of the whole core of what it was, 200 billion or 260 or something, a big portion of it was for infrastructure, and then that going to the states. I mean, that's going to have a flow-on effect in those states, and of course in the population in general.
No doubt about it. And this is exactly what our government needs to do to really get the economy firing, is to not just, give handouts and things like that. We want to see job creation. And that is at the forefront of what they are trying to do, is get people back to work. And I think this is why they're going to get, all the support they need at this stage anyway from the Labor Party, because, they're really trying to get people back to work. And because if we don't have people working, and we don't have wage growth, we don't have standard of living rising, we don't have, additional taxes being paid. So yeah, they are putting a lot of money out to fund infrastructure projects, and hopefully we will get what's called a multiplier effect through the economy. And basically that's an economic term that means that if you spend $1, that you hopefully get $2 or $3 or $4 return as the money turns over and works its way through the economy. So ideally, again, that's what fiscal stimulus is designed to do, is put money into the economy and then see that money turn over multiple times and generate more GDP. And I think, like I said in the outset, they're trying to hit us with a bazooka, and I think they've done it. And so we shall see, in a couple of months what the outcome is.
Yeah, that was going to be one of my questions, was about that sort of the velocity of money impact. So if you take $100 billion and you spend it into the economy, not just through gifting, but actually put it to work, well, that gets used multiple times. I mean, is that a multiplier of, is that the three times, 4 times? Like, how does that work?
Yeah. Well, again, hopefully you would see the velocity of money, or the multiplier effect, be, 3, 4, 5 times return. So effectively what happens, if just a simple example is, if I'm a homeowner and for whatever reason I get some grant money or something, maybe through my business, I pay myself additional wage, and now I go and hire a tradesman to work on my home and renovate it or whatever, taking advantage of maybe that first forget what the name of the scheme is, but anyway, the scheme that's out there for people to get a $25,000 grant. And then there you go, the home builder. Thank you. Yes. And so then the tradesman gets paid, and the tradesman goes and buys supplies, and he might take his family out for dinner and, do some other spending in the economy. And then all of those people whom he supports will, continue the flow and effect of that. So again, the multiplier effect of $1 of borrowed money that is then spent, you certainly want it to be more than 1, because then if it's only 1 or even less than 1, then you're not getting any bang for your buck really at all. But if you're getting 2, 3, 4, 5 times that, where that's going to show up, I guess, really, I think your question is, how are we going to know? Well, it's going to show up in GDP. So we're going to see GDP numbers at some point probably just explode. We'll go to, like a 3, 4%, maybe 5% GDP figure, hopefully next year. And that will be the signal or the sign that all this money that is being spent is making its way into the economy and is having the desired effect, which is to, again, create jobs, induce spending, and just broadly, get things moving.
Yeah, you're right. I'm looking at some data here. I had to grab it on my phone before the show, and I couldn't find it again to show on here. But we were talking about in the 2020-21 financial year of a GDP of minus 1.5%. And then the 21-22 year, it jumps up to 4.75% on GDP. So, I mean, in real terms of a turnaround, that's a massive turnaround, right? I mean, in 1 year.
Oh, yeah.
So we're going to see the effects of that year. Look out. I mean, from July 1 next year, mate, it's all go.
Definitely. Well, I think we've talked about this before, the quadrant model and some of the other predictions for Australia's where we're heading economically. And with this government stimulus, I mean, we were going to get there anyway, probably by the second half of next year, where we were hopefully going to be in a quad 1 scenario, which means that we were in a growing GDP, interest rates probably about the same, probably rising even ever so slightly. And inflation also rising, because this is another concern of the central bank here, is they want to get inflation going. It's actually minus 0.3% at the moment. So they want to see an inflation rate of 2 to 3%. So again, this is a way for them to try to get that, which is to just throw a shit ton of cash out into the market and try to put it in the right place to get the economy going. But by the middle part of next year, and even the first quarter, we should start to see signs of our economy really recovering and heading towards that, that GDP number that you just described, that 4% GDP. So I hope we get there. I really do. We're not going to know until we're there, which is a silly thing to say, but people will like to make predictions on this stuff, but really you should just be data dependent and let the data drive it. We know what they're trying to do. They've set the table for that certainly to occur, but we need to see obviously people's behavior, around spending change. And of course, if we have some sort of unfortunate relapse into a COVID environment that necessitates further shutdowns or whatever, well, that's obviously going to change the story as well. But at this point, we seem to have COVID cases declining, deaths are declining. We're coming into summer, and the government again has fired the bazooka. So they've set the table. They've really set it.
Yeah, they sure have. Look, you made an interesting point there, which I wasn't aware of. So you're saying that the inflationary rate at the moment is in negative. So therefore, how has that come about? Because I can tell you when I go to the shops, here's an example, right? I mean, I know that there's some things cheap and some things more expensive, but just the rubber gloves like you used to put on, not the heavy dishwashing ones, but just the light duty ones you used to put on stuff on the animals or whatever. And, and I know that pre-COVID, I know because I used to buy a fair few of them, they were $11 a box, like $18 a box when I checked yesterday.
Wow.
So, I mean, that's a substantial increase on one item. Now, of course, that hasn't happened across the board. But so how are we getting a negative inflationary figure when I know that most people I talk to are seeing prices of things going up?
Yeah, that's a great question. And it's the quandary of how inflation gets calculated. But if you go, and I just took this number directly from the RBA website. So I've gone to it now. It's rba.gov.au. Right there on page 1 shows you the cash rate and current inflation rate, which is again minus 0.03%. Now they have a mechanism that they calculate inflation by. It's the CPI, and I don't know. I haven't looked at it in a very long time, but there is a calculation they use. They obviously have a basket of goods, and it's weighted differently. And funnily enough, over the years, they've modified that. And one of the things, many of the things actually that are the things we need on a day-to-day basis often are not included in that CPI figure. But things like housing are probably on the decline. So basically what a negative inflation number means is we've had deflation. So I don't know why they wouldn't just change that from inflation and call that, say, deflation, and say deflation is plus 3.3%. They can't do that, right? Because people, their heads would spin.
Well, it's like
they'd be like, what's that mean?
Growth, mate. It's like negative. Who coined the term negative growth?
Yeah. I know it is stupid. It is stupid. But look, this is the game that they play around the psychology and the confidence of people. And again, Philip Lowe, who's the head of the RBA, has come out and said, we want to get inflation moving. We want 2 to 3% inflation, and they're desperate to get it. You and I, though, as individuals, we like this. The deflation for us is great. So if we're seeing deflation in the costs of goods and services, that's a benefit to you and I. But and we've talked about it before, I'm sure, but inflation is the silent tax. That's what it's called, the silent tax. It's not one of those taxes that you overtly pay, in your pay slip and all that. But you pay for it when you go to buy that box of, rubber gloves or whatever, and it went from $11 to $18. Well, that's real inflation. And you've just paid for that. So it hurts the little guy like you and me.
Yeah. And look, I think that, I guess my concern is I know that these figures are always, latent. There's a delay on the figures and all this sort of stuff. But I guess my concern is that the economy is saying that we've got deflation right now, technically, as you've just said. Us people living in the real world are saying, I reckon things are kind of going up in price or getting harder to get, so they're paying more. I mean, we've covered things like secondhand cars and that in the past, and even property prices in some areas. So I guess my point is, by the time we're seeing real inflation logged from a measurable perspective from the RBA, what is that going to mean for the real man and woman in the street? If we're already seeing those prices up now and technically the economy's in a deflationary mode, are we going to see just a massive price rise in household goods and services and stuff when we get it back to their ideal target of 2 to 3% inflation?
Yeah. Well, that's the $1 million question. And this is something that troubles a lot of economists, and I'm sure it keeps central bankers up at night, which is at what point, when they start to see inflation kick on, at what point do you then begin to adjust interest rates? Because the mechanism they use, of course, to battle inflation is to raise interest rates. Now, as you can see, if you still have it up there, the RBA, the cash rate is 0.25%. And they're projected to cut that maybe by 10 or 15 basis points. Probably they'll do it on Melbourne Cup Day, which is typically an RBA day. And so they like to deliver, a little bit of a nice thing for all the punters out there. But look, you might as well just call that zero. And so once we get to 0 or 0.1 or 0.15, there's nowhere else to go. So, and I keep saying this to my clients and to anybody that'll listen could it what?
You could go minus.
You could go negative, but that'll be an interesting situation if that ever unfolds. I certainly hope it doesn't, because I think that's a whole bunch of issues. Getting paid to have your home loan, all this kind of stuff. Anyway, lost my train of thought. Anyway, all I'm saying is inflation's one of those things that probably isn't going to be a problem until all of a sudden it is. And it creeps up on you quickly. It creeps up on you slowly, and then it's quick. So, they keep saying we want a 2 to 3% inflation. I think the Federal Reserve in the United States has kind of said we're just going to target any inflation rate right now. They would probably be happy to see a 4 or 5% inflation rate, because they know they need to juice it up. And our central banker, who's a Keynesian economist, may also be thinking that. So, anyway, I don't know what they're going to have to do to get that happening. We've had pretty low inflation for a long time. They've been unable to get it to their target rate. So I don't know what that's going to take. It could be a currency devaluation, So one of the things that Philip Lowe is also probably ruminating on is the fact that the Aussie dollar has been relatively strong of late. And therefore our exports have been hurt. So that's not good for Australia. We need to be exporting stuff to the rest of the world. That's how our national wealth increases, when we produce and sell stuff to other people in the world. So anyway, to have a lower currency would certainly assist that. So as much as I'm sure people would love to travel right now and do that on a strong Aussie dollar, because we have nowhere to go, because we can't go anywhere. Actually, we have plenty of places to go. We just can't go there. Getting the Aussie dollar down probably isn't the end of the world, and it would probably help our economy as well.
Yeah, I think that's something that would be beneficial, but it seems to be what all central bankers are trying to do.
100%. It's called a race to the bottom and beggar thy neighbor. There's a number of terms out there that are floated around for that, and so it's basically a currency war. And that is to say that if Australia is trying to devalue their currency, and we devalue it too much against the Chinese yuan or the US dollar or whatever, then they're going to do something to retaliate, to lower their currency again against our currency. And we just get into this currency war of racing down to the bottom. And this is where, not to be, too dark as we finish our final couple of minutes on the show, but this is how wars begin, and usually have begun in the past, where it starts with some sort of trade war or currency war, and then it turns into some sort of shooting war. So I certainly am not calling for anything like that or predicting anything like that to happen. But, these things can and do happen. They have happened many, many, many times over human history. And, it's I'm sure something that they're going to try to avoid at all costs. But, even just to wrap up, just to quickly touch on the political tensions between China and the U.S. and China and other parts of the world, including Australia, it'll be interesting to see how that unfolds over the next several years. If the Chinese just continue to play their very quiet behind the scenes game, or if they start to get a little bit more overt with some of their military exercises or even trade policies. So we certainly live in interesting times, and we'll continue to do so for many, many months and years to come.
Yeah, I totally agree. All right, well, thank you very much for that, PJ. I really appreciate, breaking it down for us. And I've taken a few notes here. We've got the tax cut for the wage earners, focus on the small business, home builders. We're seeing inflation in a negative sense. Well, the economy is, maybe we're not. So it was definitely a large budget, especially on infrastructure spending and stuff like that. And I don't think we've seen anything like it ever before. I haven't in my lifetime.
Yeah, I agree. I mean, this is certainly unprecedented times, and it does call for unprecedented measures. And I suppose to finish on a positive note, I think the government has done probably the best they could at this stage to try to hit everybody with some sort of stimulus. And they've done the right thing in trying to push money into parts of the economy where we're actually going to get some benefit, unlike, and I'm kind of politically agnostic, but unlike, the pork barreling that was done back in the '08 crisis of, letting people put insulation in the roofs and building fences around, schools. That was a complete, non-starter. And, so we're, as a nation, we will get benefit out of infrastructure projects long term. And that's ultimately what we want to see so that Australia can grow and continue to prosper.
Yep, no, that's good point. Well, look, as a point for everyone who's listening and watching, that I've just done the calculations here. So our next show is on the 22nd with PJ, and that'll be, what do we do then? That might be a market up. I don't know what that'll be. We might swap this around, PJ, because
we could.
After that is we're due a show on the 5th of November, which is actually one day after the US presidential election. And
oh,
might be a good time to see what's happening in the markets.
Yeah, I think so too. Well, you can switch it around, switch it up. That sounds good. Yeah, I think there's going to be.
Plan those dates. We hadn't planned it. That's the way it's come. But I reckon the 5th of November for a show with you. I might have to. I'll strap on the helmet, I think, and we'll see what's going on in the global economy, because it's going to be an interesting week, that one. So,
It sure is. Yeah, done.
All right, good. Look, PJ, thank you very much for joining us again. This has been the federal budget decoded. I appreciate your wisdom there on that. If you want to know anything more about the federal budget, or you've got some questions about our show, feel free to hit us up. We've had our website scrolling at the bottom of the screen for those that are watching, which is www.Xenium.Live. Or, of course, you can just type that in if you're listening and you weren't able to watch, because I just told you what it was. All right, that's enough from us today. We have been talking all things money, finance, and property. I'm your host, Scotty North, and this has been Xenium Live.